Guys, I have filmed this video 3 times now, and every time I've had to hit pause because there was a noise in the background and I've forgotten to press unpause and finish the whole thing to realize it was only half filmed. So this video really needs a like and it really needs a comment and a subscribe because this has taken a lot longer than it should have. So we're all here to talk about Bitcoin, why it's dropping, and what do we do about it. Now, if you've been watching this channel for a while, you will know that back in November, I posted this video here where I talked about having a crypto exit plan and scaling out on the way up rather than panic selling on the way down. So hopefully for most of you, you took that advice seriously and this current sell-off hasn't hurt you too bad. Now, if it has, don't worry. We're going to get into today where I think the bottom is. We're going to talk about the 10K Bitcoin that a lot of people are calling all over social media. And we're going to talk about why I think this really happened and what it means next for Bitcoin. So if you're a regular watcher of this channel, welcome back. Please smash that like button if you enjoy this content. If you are new here, welcome. Don't forget to not only like this video, but also hit that bell button and turn the notifications on to all so that you can be notified every time I upload a new video. Now let's take a look into some reasons why this sell-off happened. And the first thing I want to talk about is the estimated leverage ratio, which we know has been a problem for a long time. I don't think this was the cause of the current sell-off, but I think it does hold some weight. If we have a look at the estimated leverage ratio according to Crypto Quant, you can see here that right before the sell-off, the leverage ratio was at an all-time high again, which has happened many times recently, and it was sitting at around 0.22. It's currently sitting at around 0.21, so it's not really enough of a leverage flush out. However, there's something really important that I want to point out here. Now, right before this move happened, I actually posted this in my Discord. Now, if you're not part of my Discord, it's free to join, so head on over there because sometimes when there's emergency things to notify you guys of, I don't have enough time to jump on and do a YouTube video, but I will post an update in my Discord of things that I think you should be aware of. Now, what we were talking about in the community at this point in time, right before this flush out, was not only this leverage ratio that you can see here, but in the top image, we were watching the longs versus shorts. Now, you can see in that image that it was 50-50. Now, at the time of that post, price was around here. And what I had warned to the community was with the leverage ratio being so high and the longs and shorts being so even and price being squeezed into a really tight zone, what made sense to happen was that the leverage had to get flushed out. To be at the all-time high, it had to get flushed out. The question came up was, if there's so much leverage in the market, how do we know if it's leverage on the long side or leverage on the short side? So you can see there in that top image that when we looked into the longs versus the short, it was an even 50-50 fight. And when it's like that, that means that the leverage is a problem both ways. Now, when we have super high leverage, the exchanges lose. And think of the exchanges like the casino. The house never loses. So what I had warned to the community in that post right there was I wouldn't be surprised. You can see here, it says, could this lead to a one side stop hunt, then the other side flush out? And that is exactly what happened. So this push up here to the trend line came with such bullish momentum that many people thought we were going to break out long. At the same time, in this whole range here, bears would have thought that we're going to break support and potentially open short positions. So we could have had something that looked potentially like this, a break in support. Stop loss before this push up happened would have been just above that previous structure there. The bulls would have taken a long position from the breakout with their stop just below support, hoping that that was going to be the start of the new trend. So what happens is they push the price up, they stop out the bears, and then they send the price the other way and stop out the bulls. This is how they flush out the most leverage possible in the market. And you can see there in that message, it says, I would not be opening leverage trades today. And so that was one thing that could have led to this flush out. Number 2 is this chart here. Now, all of these dotted gray vertical lines that you can see are all marked with the 3rd Friday of every month. The reason for that is because that is when the options expire. And if you go back in time, you can see that most of the time it does cause a bit of a sell-off when they expire. And then we tend to have a couple of days of consolidation, and in this bull market, the market then resumes. Friday just gone was the options expiry date. Now that that's in the past, does that mean we're going to consolidate for a couple of days and then continue to head up? Not necessarily so, because we then have futures expiry on the 26th that we need to be careful of. So the options expiry could have also been another thing that contributed towards this sell-off. So let's look at the next reason that everybody's talking about, and we're talking about the traditional stock market. So looking at the NASDAQ, was down 13.9% by the time they closed for the week. S&P is down 8.8%. US 30 is down 7.4%. So of course, when the traditional stock market has a bit of a fall, it usually does affect crypto. But it's currently the weekend. Those markets are closed. They can't drop any further. So why is Bitcoin still dropping? In my personal opinion, the reason Bitcoin continues to drop during the weekend is because it's the only market that is open 24/7. Therefore, retail traders or investors or mum and dad investors or whatever who are freaking out that the entire market has dropped only have the choice to sell out of cryptocurrency on a weekend. So I think that's why we've seen a bigger drop on the weekend, as it's the retailers tacking on to the end of the Friday sell-off. Now, all of those things combined could have led to Bitcoin's major sell-off right now. The question is, are we going to see 10K? And also, where does that number even come from? So let's talk about that. Now, I understand the reasoning behind it. When Bitcoin has peaked in its market cycle, it usually declines somewhere between 80 to 85%. So if we just draw that as a straight down, somewhere in the middle, that brings us to around, say, $12,000 Bitcoin. And so the 10 to 12K Bitcoin price estimate comes simply because in past cycles, that's what we've retraced to. So I understand the measurement. However, I think there's more that we need to know about than just doing a simple percentage measurement. And what I'm actually talking about here is the people that actually make this market. So I'm talking about the Bitcoin miners. Now, it's really important to understand how this works. And I'm going to go to a chart that takes us all the way back in time. And we're going back to 2010. Now, the theory is that when Bitcoin has peaked in a market cycle and found its all-time high, it then goes through a bear market. And then when it eventually pushes up again and gets back to that all-time high, the previous all-time high, and finally breaks it, it never revisits the original all-time high again. So if we look back here as an example, we pushed up and the all-time high was created at around $28. Then it went into a bear market, and a couple of years later, it revisited that same level and broke through. Once it eventually broke through, we have never seen $28 Bitcoin ever again. And then you can see that same thing happened here. So we went through the next cycle and Bitcoin pushed up to $1,100, went through a bear market, and eventually came back to the $1,100 area, pushed through, and we've never seen $1,100 Bitcoin again. And this goes on through all the cycles. So now when we get here, the last all-time high that we had in 2017 was $20,000. Went through a bear market, turned around, and we broke that $20,000 in November 2020. Currently, where we stand right now, we have never seen $20,000 Bitcoin again. Now, of course, all models can change, but the more important thing is to understand why this would be. And it comes down to the miners and the halving effect. So the way that it works is that if Bitcoin were to drop below its previous cycle all-time high, mining would no longer be profitable for the miners. So therefore, in order for this to stay a profitable operation for the miners, the price of Bitcoin needs to stay above $20,000. And that's why until this model breaks, I don't think we're ever going to see below $20,000 Bitcoin again. Now, does that mean that we will see $20,000 Bitcoin again or $21,000 Bitcoin again? That's what we need to find out next. And there's a couple of interesting things I want to show you. So first of all, having a look at this article here, you can see here that it says on January 21, 2022, the Bitcoin network's mining difficulty climbed by 9.32%, reaching an all-time high of 26.64, breaking the previous record of 25.04 on May 13, 2021. So if the previous record was May 13, 2021, let's have a look what happened to Bitcoin around that date. Now, this was the date of the previous all-time high of the Bitcoin mining difficulty, and we saw Bitcoin drop by 50%. The current all-time high came around around here. And if we measure the move so far, we're only at about 20%. So if we were to repeat history and have another 50% because of this mining difficulty, where would that bring Bitcoin? So let's just stretch this out to around 50%. That'll bring Bitcoin's price to around 21,600, which keeps us above the previous all-time high. So that's one thing to keep in mind. But let's go back to the article, and you can see here it says, the rise in difficulty has also resulted in an increased hash rate for the Bitcoin. Although Bitcoin was on a downtrend, dropping below the 40K mark, its security was at an all-time high. This is the important part. Miners are not part of the selling circle and are holding on to their coins. Now, if we have a look at this crypto quant chart, you can see that here, this purple line is the Bitcoin miner reserve. And you can see here that this line is actually increasing. So that's actually in line with what this article is saying, that the miners are not trying to sell right now. Bitcoin miners continue to remain bullish on BTC, which goes to show that miners still find value in mining Bitcoin. So if that's the case, then we have to wonder, at what price does Bitcoin become unprofitable for them? Is it the 20K all-time high, or is there another number? Now, looking at this article, you can see this headline, although Bitcoin price drops by 20%, Bitcoin miners will not capitulate. Although Bitcoin price has fallen by $27,000 below its all-time high, miners find it more attractive than ever. The hash rate and estimate of the total processing power used for mining reached new record levels. Those concerned that a further drop in the Bitcoin price could pressure miners to sell their coins. However, they received new data covering how much BTC they should trade for breaking even. And this is the number that we need to know. Using the Bitcoin production cost indicator of Charles Edwards as a reference, Twitter user Venture Founder revealed the current price break-even point is US $34,000. So let's mark that into our chart, $34,000. And so far, at the time of filming this, we have wicked exactly to that number, which is very interesting. And then it says here, however, miners do not have to sell their BTC thanks to the current profitability and prospects of the cryptocurrency market. In 2019, Edwards noticed that transaction fees give an additional cushion against spot price incursions below the production cost. New data shows that Bitcoin miners are accumulating more coins than ever before in the last 5 months. That could signal current prices will not lead to a sell-off. So then you have to ask yourself, if the miners are not selling and they are accumulating, then what are we doing? Lastly, renowned analysts predict a Bitcoin price of no less than 30,000 in the worst case. So let's also mark out 30,000, which also brings us to a very key demand zone for Bitcoin. So now, with all of that in mind, is this a time to buy the dips? I personally don't think it is the time just yet, and here's why. This chart is showing us the dates of all the FOMC meetings, and I won't go over the past data because I have done that in a previous video. However, you can see here that the next FOMC meeting is coming up on the 25th to the 26th of January, which is only a few days away. Now, depending on what comes out of that meeting, it could lead to a further sell-off, or it could lead to an amazing recovery. We may continue to sell off until that meeting, or we may have a slight recovery before it, and then if the news is bad, sell off again. So for me, I don't think it's the time to be buying dips until we hear what comes out of that meeting. So considering that's only a couple of days, let's go through some scenarios about what could happen between now and then. Throughout the rest of the weekend, I do think we're either going to continue to sell off or just go sideways and do absolutely nothing. What could happen next week was we may see a little bit of a recovery back to the current trend line, and then there could be a possibility that we reject off that trend line, and that may bring us back down to the $30,000 level. By that time, we may have the news out of the FOMC meeting, and if we do and it's bad, that could bring us down to anywhere between $30,000 and the 21,600 level. At this point in time, I don't think that's going to happen. However, I'm not psychic, and I basically trade what I see. So until we break 30,000, reason, it's hard to know how much further we would drop. What's the bullish scenario? Or do I think there is a bullish scenario right now? The more important question is, what is it going to take for Bitcoin to push out of this, become bullish again, and get us past the 60K area? In my opinion, it's not going to take a little bit of a change in market structure. It's not going to take some retailers coming back in. It's going to take big money, a big catalyst, a big event that is extremely bullish for Bitcoin. And what could that actually be? Well, lucky for you, I may have the answer. So looking at this article here, which is an old article, however, it's got a key date in it. And you can see that back in December, the SEC had delayed its decision on 2 separate Bitcoin spot ETFs by 45 days. Last year, towards the end of last year, we did have futures Bitcoin ETFs approved that didn't do much for price. And the reason for that is because they were futures ETFs. So it was just speculation on the price. They're not actually holding the underlying asset. What is extremely bullish for Bitcoin is the spot ETFs, because what that does is it means that it's removing the supply from the market in massive amounts of money. So should a spot Bitcoin ETF get approved, this would be extremely bullish for Bitcoin. And moving further down here, it says the SEC will either approve, disapprove, or institute proceedings to determine whether to disapprove by February 1st for 2022 for Bitwise, and by February 6th, 2022 for Grayscale. So that's not too far away. So if we go back to the chart, here's what could happen. And this is 100% speculation, but it could be possible that we continue this downtrend up until and beyond the FOMC meeting. So for the rest of January, and then we may find support, hopefully at around the $30,000 level at the lowest. And then people may start to buy the rumor of the spot ETFs being approved. If they do get approved, then we may be out of this mess from there. Now, if all of that happens and we see the price of Bitcoin start to turn around in, say, the first week of February, that's when I'm going to start thinking about getting back into altcoins as well. And for me, there's only 6 coins that I'm interested in getting back into, should the market prove to me that it is bullish again. And I will go through those 6 coins in another video. For now, all I'm worrying about is when I should get back into Bitcoin. So for me, number 1, I'm waiting to see, will we hold that 34,000 break even level for the miners? That's number 1, and change market structure from there. Number 2, waiting for the FOMC meeting announcement and then seeing what that does to the market overall. If it's terrible and Bitcoin drops even further from there, then I'm watching the $30,000 level. Should we break that level, then I think it's going to take a really long time for Bitcoin to recover. However, I'm pretty hopeful at this stage that 30,000 is the lowest we'll go, somewhere between 30 and 34. Of course, as new market structure is created, I will update you on that. But so far, that is my plan. So I am not currently buying the dips. I am waiting just a few more days to see if we have further downside. And in the meantime, I'm just staying safe. So before we finish this video, I need to announce the next 2 winners of the My Crypto Case competition. We have announced 2 winners so far. There are 3 more winners to go, and you are not too late. So in case you're unaware, in July of 2021, I invested $100 into 10 coins, so $100 each into 10 different coins, with the goal of giving those coins away to this community. There are 5 winners and 2 coins per winner. 2 winners have been announced already, and we are now going to announce the next 2. And all you need to do is subscribe to this channel and leave your email details on my website, which is linked in the description of this channel, for your chance to win. So now let's draw the next 2 winners. And the first winner's email starts with JK. So if your email starts with JK, make sure you look out for an email from me. My email is listed down below. So if you do get an email, make sure that you double check that it is mine, as there are many impersonators on the internet trying to pretend to be me and take your money. So make sure that you double check that email. Do not email me, I will email you. Only reply to that email. That way I also know that it is really you, because the last thing I want is to be sending your prize to the wrong person. All right, let's draw the second winner. And the second winner's email address starts with JOE. So if your email starts with JOE, same instructions as before. Just make sure you keep an eye out on your emails from an email for me. Congratulations to both of you. And lastly, don't forget, if you have friends or family that are not yet into cryptocurrency but want to get started and have no idea where to start, I have just released a Zero to Crypto course. It is 1 video a day, no more than 20 minutes for 7 days, and each day I will be showing you how to buy, store, earn, and spend your crypto safely, and it's only $37. So if you have friends and family wanting to get into space, just check out the link below for that course. And lastly, don't forget, if you enjoyed this video, please like, subscribe, and leave me a comment down below of what you think about the market and what you are planning to do. Stay safe out there, and I'll see you next time.